Hi guys, welcome back to another video on the NZDayTrader channel. I'm Shami and today I'm just going to be talking about the wicks on the charts. So wicks are very important when it comes to charting because they tell us a lot. I mean, if there's like a bottom wick, then that means that the price has gone down and then it's gone back up, meaning that there's buyers present. And if there's a wick at the top of the candlestick, then that means that basically the price has gone up but it's been sold back down. So today I'm just going to explain a little bit about how that works. First of all, I just want to cover about what's happening in the NZ market. So basically what's happening is we had this sort of uptrend and now the market's kind of consolidating at the moment. So a lot of people probably don't know whether the market's going up or down, because what's happening is we had a little sort of down. So after that sort of that huge sort of upwards trend, we've had like a downwards move, and now we're kind of stuck sideways. So the market's kind of consolidated at the moment. Let's take that away. So we're kind of stuck in, we're kind of stuck in that sort of zone right here. So what we want to do is we want to make sure that we can get sort of a break above that 12,800 level, because if we break above that 12,800 level and we hold, then that can signal that the market's back into an uptrend, and we can deem that a pretty good uptrend, and we'll start to see stocks starting to go up again. We're already starting to see some strength in stocks as well in the New Zealand market, because as you can see on the right hand side on my NZX percentage gainers, we have some stocks making 3% moves, 2% moves, so there's a lot of stocks that are in the green as well, so which is quite a good sign. So going back to the wicks, so basically I'm just going to show you what a wick means, and let's see if we can find a good example of a wick. Let's see. Here we go. So we're just going to use MCY. So we're going to use Mercury as an example of a wick. So basically, for you guys that don't know, so this is a candlestick. So this chart that I'm using is a candlestick chart. So anyone that wants to change the charts to candlestick, you can go up here and just hit the candles button. You can also use a bar chart and all this other type of stuff. Hollow candles, that doesn't really matter, it's just colors. You also have like this Heiken Ashy one, which I've tried to use, but but at the end of the day, like all this charts is just like, it's just price on the chart basically. The only thing that matters is that the volume down the bottom and the direction of the price. That's all that really matters. I mean, the stuff in the middle is what we want to trade, and we always want to make sure that the long-term trend is higher, because the trend is your friend, and a long-term trend, we should be assuming that it will always continue higher into the future. So that's when you can take advantage of any like dips or any sort of consolidation stages and anything like that. So back to the candle charts. I mean, there's also this Renko one. So the Renko one's quite interesting as well. I forgot what the formula is behind it. So basically it just plots data in a different way. So anyways, back to candlesticks. There we go. So good old candlesticks, that's how I do it. That's how most traders do it as well. But that doesn't mean to say that you can't find your own strategy. I mean, if you find something that consistently happens in the markets using these charts, and you can sort of create your own strategy around it, and it happens majority of the time, you can manage your risk, then definitely go for it. So cool. So back to the wicks. So basically when a price of a stock usually breaks out, so here we saw that, let's see an example. So basically over here, we see it start to break out, but however what we're starting to see is these wicks. So these wicks here, so the wicks, this thing right here, right there, that little wick, this means that it's gone up, it's gone down, but it's closed a little bit lower than its high. So as you can see, every day, the wick is getting bigger. So that means there's sellers present, because the people that have kind of bought, over here or bought over here, so they're willing to sell now. So as you can see, there's like a wick over here as well. So just be mindful of the wicks, because what happens is when there's wicks on your candles, on your charts, it means that there's sellers present, there's people looking to sell. And you can see that MCY has quite a lot of wicks all over the place. There's a wick here, there's a wick here. So that means this stock has quite a lot of action in the day, because so basically a candlestick basically represents a high, a low, an open, and a close. So if the candlestick is green, usually what happens is it's opened here, it's closed there. But the lowest point was this open. So it opened at $7.24, it went as high as $7.59, then it sold right back down all the way to $7.39. So that means, you know, the buyers and sellers are just creating that volatility. People are buying, people are selling. And at the end of the day, like with trading, it's just basically buyers versus sellers. So are the buyers stronger in a scenario, or are the sellers stronger in any given scenario? So that's what we want to see. The more tighter your price action, the more chance of it continuing higher, and the more orderly the price action is, the more chance of it continuing higher as well. So what I mean by orderly is you want to have tight sort of price sort of ranges. So here everything's kind of extending, you know, super. Oh, this is a crypto chart. Sorry, whoops. I don't know where that came from. Yeah. So let's see this one here, for example. So AFT, I think they had an announcement over here. I was actually watching this when I was at work. What happened was they had an announcement. I think they got a deal or something, and in the US, and basically it's just they're gonna start making a lot more money. So that's the thing with markets, like in stocks, you never know like for sure if a stock is going to continue higher or if it's going to go lower, because stocks are so volatile, and there's stuff that happens behind the scenes as well, like pre-market, after the market. Yeah, because you can see here as well, like, you know, the stock is, you know, had a really nice sort of bump up here, and the next day it's just fell. So like it doesn't make any sense. Like everyone that bought here would have got burned straight down here. They would have got burned like 10% straight away, and they would have either taken a huge loss, or they would have turned into an investor if they were a trader. Because if you're a trader, then you have to be taking your losses. You've got to be taking small losses, and you've got to make sure that your wins are a lot bigger too, to compensate for those losses. So yeah, so that kind of gap down, keep going lower. Here it's going to get back up. So this one is, like, as you can see, it's not a very orderly stock. There's no sort of direction. It's kind of there you go. It's kind of all over the place. Look at that. How are you going to trade something like that? I mean, if you can find a consistent strategy revolving around that sort of stuff, then definitely go for it. So yeah. Kathmandu, too long to do its thing, so I just got out. So I think there was I think I got it around over here somewhere, and then basically I held it all the way down here, and I think I sold it over here. Because with me, because what I want to do is I want to get in the stocks, I want to get in, let it do its thing, use that momentum, ride it up, and just get the hell out of there, because I want to trade other things. It continued to go up, you know, it's had a large volume spike here, and it's sort of going in an upwards direction, so it might continue that way as well. Who knows, it might even go back up to, you know, all-time highs up here. But yeah, who knows. Cool. Again, you can't predict anything. You can make your best sort of analysis. You can sort of... So what I mean by predict, you can't predict accurately what's going to happen, but you can put the probabilities in your favor if you are planning your trades correctly. And you can also manage your risk as well. So let's say you got in here. Let's say you bought the stock right there. Then if you want, you can put your stop loss down here, like pretty low, and then kind of, you know, ride it out until it gets to price target of 80. So basically that's your risk versus your reward. So that's a good trade there if anyone wants to do it. Again, if your price does go lower, then stick to your stop loss levels, because if it does go to here, then you got to honor that stop loss level. And that's the thing, like if you honor that stop loss level, then you'll make sure that your losses are small and your wins are bigger. So just remember that when trading. Cool. Sweet. Yeah, so going back to the wicks. Yeah, so again, like any sort of wicks you see up here, it could continue going higher, but the bigger the wick, as you can see, there's a huge wick over here, it went lower. There's a huge wick over here, it went lower. So you just got to be careful with this. Like you know, stocks are very volatile, and you want to be catching consistent trends or consistent price action, because at the end of the day, you don't want to be trading large like volatile stuff, because you'll get burned. Simple as that. Even this one, even Sky City's starting to break out. See, look at that. We're stuck in a range for ages. Finally, after around about 16th March to like April, after a month, it's starting to actually make a move. So yeah, so I'm not on this one at the moment, but if anyone is, then yeah, good stuff. Cool. So that's sort of a tightening. There you go. That's tight price action right there. The tighter the price action, the tighter the ranges, the more that buyers and sellers are kind of equaling out. Because what's happening in here is that there's basically a tussle between the buyers and the sellers. So the stock has made an upwards trend. Hang on, let me just map this out in a psychological way. So using trader psychology, the stock has made an upwards move, and it's a pretty orderly upwards move as well. Like there's no sort of huge dip or no sort of gap up. So here you can see like a huge gap up, right? It's gone from like $3 and it gapped up to like $3.14. Then obviously when there's a huge gap up, then it's gonna, you know, come down with some selling. That's what usually happens. But an orderly upwards trend like this is likely to continue going until you see like a huge red candle. So here we saw a couple of huge red candles here, but what happened? It got bought up, went up here, and then all of a sudden it's starting to form that sort of range. So basically, now that the stock is breaking out, it can probably continue to trend higher. So which is great. Yeah, so these tightening of the ranges basically, so the sellers and the buyers are like equaling each other out. So so the sellers and the buyers are kind of at equilibrium, and then at the end of the day, when sort of the fight between the buyers and sellers are over, it'll either likely, if the sellers are stronger, it'll move downwards, or if the buyers are stronger, then it'll move upwards. So in this case, the buyers are stronger, and it's looking like it's going to make an upwards move, and we can take advantage of something like that. So if you invest here and it went up there, then you can make like 5%. So we got 10 grand, that's $560 right there. Minus fees, probably like 520 or something. But yeah, like just an idea. At the end of the day, I'm a very picky trader. I trade stuff that's, you know, what's in my strategy. I don't be trading random stuff like this. I mean, because at the end of the day, you want to be very, the thing with trading is you want to be sticking to what you know and what works for you. And the thing is, if you trade anything silly all the time, then what's going to happen? You're going to have a bunch of losses, you're going to have a bunch of wins, but you got to trade in a systemized way. So that's the type of stuff that I offer in my course as well. If anyone looking to be like a, you know, a professional in the NZ market, I'm also trying to look for consistency in crypto as well at the moment. Slowly getting there, so I'm just kind of just testing everything, just testing different patterns or strategies, and that'll kind of work out as well eventually. We've got a website as well, so NZDayTrader, if you guys want to check it out. It's pretty cool. So I'll just show you guys. There we go. So I just made a sort of website over here. So the guy set it up for me, which is pretty cool. So yeah, so the perfect course to become a master day trader. So for anyone that wants to join like I'm creating like a Facebook group, and the Facebook group is free to join. I'm just going to post some sort of forums on there, or just random questions and stuff, just to get everyone involved. And who knows, I might do something real cool on there in the future. So, you know, anything could happen. So yeah, if you want to join that you know, Facebook group, then just come on to NZDayTrader.com and just hit that join for free now, and then join the Facebook group. You know, take the free course. You know, get into trading. Eventually, you know, we can take this website and get into different markets too, because it's not just the NZ market that we can do. The thing is, I'm starting out with the NZ market. I've done other markets before, but the thing is, like, I'm quite consistent in the NZ market, and soon I want to branch out into like crypto, the US market, and all that type of stuff, because the same strategies in this course and the same like principles and values that I teach for trading can be applied to any market. Not 100%, because, you know, we're using stuff like Sharesies and you know, direct broking and NZX announcements and stuff. But yeah, the Aussie market, the US market, crypto, majority of the stuff in this course can basically cover that sort of stuff as well. But in the future, I'll also, when I build some consistency, because at the same time, I'm building a product and I'm marketing a product that works. Like that's the whole reason I created like a course, because I was like pretty confident in what I do. I've done it for a while now. I was like, all right, I've got a skill. How do I market that skill? How do I turn it into a business alongside my trading? And that's the thing. So that's pretty cool. So yeah, definitely check out the page. Yeah, so that's all good. Alright guys, thanks for watching this video. I probably rambled on enough. I hope you can hopefully you can take some learnings on this video and what I say. Like I say a lot of stuff in like, how many minutes have been, like 16 minutes. So a lot of stuff I say, just pick and choose which information you want to take. So hopefully I can provide some value along the way. And as always, just like the video, I appreciate that, and also subscribe to the channel as well. So any questions, just stick it in the comments, and yeah, I'll see you guys in the next video.